In tonight's Business Insider, the Federal Reserve. Today, Fed Chair Janet Yellen said the central bank will be cautious about raising interest rates because the U.S. economy faces a number of global threats that could derail growth. Joining me with the latest is Jason Howell, Family Wealth Advisor at Jason Howell Company. All right, Jason, let's start there. What threats is Yellen talking about? How do they relate to interest rates?
Well, there are some threats. I mean, number one, our dollar is strong, which sounds pretty good, but that does make it harder for our goods to be exported to other countries. It makes them more expensive. Secondly, of course, oil is very, very cheap these days. Demand is quite low and supply is still high no matter what happens with OPEC. And then when you consider the final thing, looking at wow, what's happening in China? It seems that their economy itself is tanking a little bit, and when that happens as the second largest economy, we all start getting worried. The word Janet Yellen can't say is potential recession. I guess that's two words. The
minute you say it, it becomes self-fulfilling. It would be irresponsible for her or anybody else to talk about it. Problem with China, we can't trust them. You can't really know what China's up to. All of what you're saying makes sense, so how are investors responding?
Well, investors are responding as you think they might. They're listening to analysts and looking at the market. There's been so much volatility this year that it makes people very, very scared to not only invest, but to go forward and be confident. And once that confidence starts dropping, then everything starts dropping in the market.
Now, there's also a growing number of central banks adopting negative interest rates. The list includes the European Central Bank, banks in Japan, Sweden, Switzerland, and Denmark. Could the Fed follow suit?
Well, the Fed has really just a few jobs mandated by Congress. I mean, number one, it's about price stability. It's about looking at the long-term interest rates and modulating that, and of course, having maximum job output. The problem with looking at negative interest rates is saying, well, gosh, do we need to do that? We just got to the point where we started raising interest rates a little bit. I don't think we're going to see our Federal Reserve doing that because we're strong enough. We have fiscal policy versus monetary policy. Monetary policy has been working for the past few years. It's time for fiscal policy, i.e. Congress, to get involved.
Jason, I'd like to talk about a few media companies. In the past 2 days, companies like Viacom, Disney, and Time Warner have struggled on Wall Street. What's going on?
A lot of the entertainment companies are struggling, and whether it's Viacom, Disney, or Time Warner, they all have their certain specific issues. You know, Viacom is looking at its relationship with Dish Network. Time Warner is looking at its costs with putting out HBO Now, for example. And what we have also Disney. Disney is looking at ESPN. Their subscribership has dropped from 99 million down to about 92 million in just 3 years. Generally, though, these companies are looking at the competition between digital opportunities versus the companies that they have now, or not the companies they have now, but the tools they have now. And that stress has been ongoing for a long time. How are they going to compete with the digital divide between cable and the opportunities online?
For example, Netflix. I mean, 10 years ago, you didn't have all this competition. People weren't cutting the cord. Now, all of this is taking place.
Yeah, and it's difficult. You can't turn around the Titanic in a year or 2 years or 3 years. It's just a really big ship. It's a lot of business, and reacting sometimes means making big cuts, maybe making changes that they don't want to make. The stock price is important, and these big companies have made money for a long time, so they will figure it out because those CEOs do want their bonuses.
You're right about that. I'd like to talk about one more story shaping financial markets this month. Pharmaceutical chief Martin Shkreli appeared on Capitol Hill last week for a hearing about the prescription drug market. Shkreli is a real lightning rod. Bring us up to date.
Well, here's a young guy who's been pretty successful for the early part of his career and early part of his life. Just a little over 33 years old. He's a CEO of a hedge fund. He's CEO of a pharmaceutical company. But he first became notorious by raising the price of a drug that helps with a lot of things, 5,000%.
HIV, among other things.
Yeah, and he figured he needed to make a profit. That was his reasoning for doing that. So last December, he was indicted by the FBI, not for the drug thing, but for actually the hedge fund. Just recently, he's been over, as you mentioned, over to Congress and had an opportunity to plead the fifth, as many folks do. But then last week, he was sued by the folks who actually drew up the Wu-Tang Clan album's artwork. So he's getting personal lawsuits as well as getting public profiles that really aren't good for him at all.
Now, raising these prices by 5,000%, is it illegal, immoral, or simply a savvy business move by a genius investor?
It depends on your definition of savvy, I suppose. Certainly he's become notorious, and now everyone knows his name. So if that's what you'd like, well, he's succeeded in that regard. But sometimes when you sort of fan the flames of the public, things happen to you that aren't so great. And it was soon after that that he got indicted by the FBI because of his hedge fund activities.
Check the pharmaceutical stock, the biotech stocks, among other reasons, along with Hillary Clinton, Bernie Sanders, everybody piling on stories like this, the high price of pharmaceuticals. the whole market has dropped through the bottom, and Shkreli is certainly the poster boy of that. So, from my opinion, the reason my 401k is doing so poorly in biotechs and pharmaceuticals are people like that.
Blame Shkreli. That's the easiest thing to do. Unfortunately, there are many, many other macro events, as we said at the top, looking at whether it's China, whether it's oil prices, and whether it's just this overall concern with the market. We're going to continue having this volatility throughout the year. My advice to everyone listening is to look at what you're trying to do with your goals and kind of close your eyes sometimes. This is not good to look at.
And it's an election year, too, so hopefully things will level out and get a lot better a year from now.
And I think we all hope so.
Jason Howell, Family Wealth Advisor at Jason Howell Company. Good to have your insight, Jason.
Thanks for having me, Morris.